What's up guys, Bill Hawk here, back with another video, and today I'm going to be talking about two giant home retailers in the home improvement space. And there's literally only two that fit that description. That's Home Depot and Lowe. So the question is, which one should you buy given where we are today? And I'm going to throw on a bonus stock which I analyzed along the way in this space. So I'm going to give that to you as well. So let's get right into it. But first, as always, please hit the like button at any point in this video where you receive some value, because it helps me out with the YouTube algorithm, and that's literally all I ask in return. And don't forget to subscribe, because we have a lot more content in terms of stocks, crypto, real estate coming your way, and we're all in this together at the end of the day. First, let's analyze the revenue and business models. Lowe's and Home Depot are virtually identical businesses, which makes them direct competitors. They each have three segments which separates their businesses. Home decor includes appliances, decor, flooring, kitchen and bath, and paint. Building products includes building materials, electrical, lighting, lumber, millwork, and rough plumbing. Whereas Hardlines, that includes hardware, lawn and garden, seasonal and outdoor living, and tools. Each of these segments are about equal in terms of proportion for both Home Depot and Lowe's. They each make up about a third of the total revenues for each Home Depot and Lowe's. So what I wanted to see here specifically, as you can see, was if there was any sort of beneficiary that was directly related to COVID-19, and there really wasn't. They all grew about equally, and this tells me that there wasn't any anomaly in terms of demand or supply constraints or inflation to any one category. So because it was a little bit more equal in all the categories, this gives me an indication that the growth was somewhat healthy. When I use the word healthy, it just means that there's a little bit more of a chance of it being sustainable rather than a clearly unsustainable growth in any one specific category. Some other similarities between Home Depot and Lowe's is the fact that they both have more than 90% of their business in the US, so 92% to be exact. Lowe's has 1974 or 1,974 doors worldwide, and Home Depot has 2312. If you're wondering how I got these numbers exact, I just looked at it. So Home Depot has 17% more doors, which gives it a little bit of an advantage there in terms of location, whereas Lowe's is just more focused on optimization right now. Speaking of optimization, as you can see here, Home Depot sells $544 per square feet in terms of retail space, whereas Lowe's sells $431. So this 26 or 27% difference, Lowe's is trying to catch up with through two things: omnichannel distribution and is focused on pro customers. Right now, Home Depot sells to 40 to 45% to pro customers, whereas Lowe's sells only 20 to 25%. So Home Depot has a significant advantage in this category, but this is also a significant opportunity for Lowe's to grow. Home Depot also has advantages over Lowe's in terms of supply chain efficiency, which you can see in its higher margins, and also its physical location. So 90% of the US population lives within 10 miles of a Home Depot, whereas they live within 20 miles of a Lowe's. In the world of omnichannel shopping, where we have things like curbside pickup, this is a huge advantage. In fact, Home Depot's online sales grew 86% in 2020 and now represent about 15% of total sales. Home Depot has grown to become the 5th largest online retailer in the US, but again, these are all growth opportunities for Lowe's, which CEO Marvin Ellison is laser focused on right now. Marvin Ellison joined Lowe's in 2018 and he's done a phenomenal job so far. He was an executive at Home Depot from 2002 to 2014 and helped oversee its turnaround at the time. Marvin is proving to be the best leader for who Lowe's needs right now. So right now in your screen, hopefully you can see the revenue comparison between Home Depot, Lowe's, and that bonus stock which I was talking about, which is Floor and Decor, ticker FND. It's a company that I really like, that's growing really fast, but of course valuation we'll talk about later as to whether we buy it or not. So as you can see, from 2017 to 2018, Home Depot had 7% growth, whereas Lowe's had 4% growth. FND, or Floor and Decor, had 23% growth, which is massive, but it's also a much smaller company and is in rapid growth right now. 2019, Home Depot had 2% growth, Lowe's had 1% growth. So you can see these are very modest growth rates before the pandemic. Once the pandemic hit, Home Depot had a 20% growth rate, Lowe's had a 24% growth rate, and FND obviously didn't have that much of a jump, but we'll get into that. So obviously, what drove this demand? During the pandemic, there was a lot of people doing DIY, they were stuck at home, and they were just working on their home projects, which they didn't get a chance to work on before. And that's natural and it makes sense, but now the question is, how much of that growth is sustainable? So going into 2021, this pandemic doesn't seem to end for whatever reason, but you can see Home Depot in the first quarter had 33% growth, Lowe's had 24% growth, where FND had 41%. For the second quarter, now we're comping these COVID numbers. So COVID started during Q2 of 2020. Now this is going to be a little bit more difficult because now we're comping against those numbers. Home Depot still managed to grow an 8% above that, which is really, really impressive. That's crazy impressive. Lowe's grew 1%. And although that doesn't seem impressive, it's still 1% above that surge from the COVID pandemic. And you can see here FND just blew past that number because they had more actual shutdowns and store closures during the pandemic, and that's what explains that. So they weren't as ready in terms of that omnichannel approach like Home Depot, and Lowe's were able to pivot very quickly. So now the question is whether we're going to see some more growth going forward or whether they're going to actually contract. With Lowe's, we can actually see the case for contraction. In order to answer that question, how much of these sales are sustainable versus not, we want to dig a bit deeper and we want to take a look at this metric called comparable sales. And this is a more telling metric because it gives us the net growth of sales ignoring or factoring out retail expansion in terms of square footage or contraction. So this is a better metric to look at. And you can see in Q2 of 2021, Lowe's was actually down 1.5%, whereas Home Depot was actually up 4.5%. So to me, this is a clear indication where Home Depot has an edge because of its focus on pro customers, because the DIYers are naturally going to drop a lot faster and quicker than the pro customers. In fact, the pro customers are still seeing demand pent up from the pandemic because they didn't get a lot of jobs and now they're getting jobs. So Home Depot will be able to have a better advantage in terms of Lowe's going forward from these tougher comps. Don't get me wrong, I think Lowe's is a great stock and a great company to own, but I think Home Depot right now has a little bit more of a defensive position than Lowe's given the challenges or potential challenges we have ahead. At the end of the day, it just comes down to valuation because both Home Depot and Lowe's are quality companies with solid dividends. And Lowe's is actually a dividend aristocrat, meaning it's been able to maintain and grow dividends for 25 consecutive years, which is crazy. So I can understand the case for owning either of these stocks in your portfolio, but the real question is at what price? So here are some key valuation metrics which I took a look at, which by the way you can get in my email list if you subscribe. The link is down below. You get access to all of this stuff and a lot more detailed and up-to-date information in terms of investments. So you can see here in terms of inventory turnover ratio, by no surprise, Home Depot is more efficient with a ratio of 5.6, whereas Lowe's has a ratio of 4.1. And naturally, Floor and Decor is going to lag in these indicators because they're much younger and growing company. Return on invested capital, Home Depot was 42% and Lowe's is 38%. And these are huge numbers for both because I don't know any other retailer with numbers this big. That's huge numbers. But debt to equity is something that really turns me off about both of these companies, is the fact that they're so leveraged. With a debt to equity ratio of 13 and 18, it makes me feel really uncomfortable owning these companies, but that's just the nature of what they are. But as you can see from the dividend payout ratio, with 50% for Home Depot and 30% for Lowe's, they're more than comfortably paying out dividends. So really, it's probably a dividend stock with a little bit of growth in them. That's the way to see them. In terms of PE, Lowe's is more attractively priced in terms of PEG as well. And in terms of price to free cash flow, Home Depot is the winner. Because as I was saying, these are more dividend stocks, we want to take a closer look at the dividend yield, where you can see Home Depot has a slight edge with a 1.97% yield, whereas Lowe's has a 1.54% yield. But we also want to take a look at the buyback yield, whereas Lowe's is buying back shares a lot more aggressively. So their buyback yield is about above 8%, which is really high. So we don't want to overlook this, which net I think gives Lowe's an advantage. So based on these metrics, I would conclude that Lowe's potentially has a bit higher upside, but that upside does come with a little bit more risk, which is congruent with the story that we've been telling so far. So the question now is, what is their intrinsic values? We want to take a look at their dividend discount model along with their DCF, which is what we usually do. So these are purely based off of analyst expectations, which I do have concerns with, which I'll get into in my conclusion, and I'll explain why I didn't get into it now. But as you can see with Home Depot, I came up with a price target of $354, which factors in the DCF, factors in the dividend discount model, and factors in a normalized price to free cash flow ratio and a compression of that. So that gives us a 6% upside from where we are today. With Lowe's, I got a $260 price target, which is a 26% upside from where we are today. And with FND or Floor and Decor, that's a negative 54%, so half of the value we are today, because that just means that we're probably overvaluing the stock. And although it's a great company that I would want to invest in if the valuation was right. So that's my conclusion there. But as you can see here, Lowe's is a clear winner in terms of investing. So in terms of the risks we talked about so far, we talked about the post-pandemic slowdown. We just don't know how big this is going to be. We talked about their high levels of debt, which is a risk when interest rates go up, because they will, which is going to lower earnings. And then the one that we didn't talk about was the housing market in general. It's been on fire, it's booming for several years, and this is a natural risk which you should check in your portfolio if you have overexposure to real estate. Okay, so in conclusion, if I were to ignore the biggest macroeconomic risk that I see right now, which is the post-pandemic drought, which is the one I'm most concerned with, I would probably pick Lowe's because I like the fact that there's solid dividends and there's also that upside for growth. With Home Depot, that growth is arguably limited because they've already penetrated the pro market, whereas Lowe's has definitely a lot more work to do in terms of penetration to the pro market, and I think that's a big upside for them. And I think Marvin Ellison's doing a great job, so I actually would like to own Lowe's in a perfect environment where that risk of slowdown post-pandemic wasn't there. Now, given it is there and we can't just ignore it, I think the better pick is Home Depot, because at the end of the day, we were picking these stocks to be defensive. We're not picking these stocks to look to 10x. And that's where I believe Home Depot is a better pick given the current environment we are right now. In order to diversify, I would probably go in with both if I were to invest today. Now the question is, should you actually invest today? I can't tell you what to do, but I can tell you what I believe. And I don't believe that right now is just not the time right now, because there's a lot of risk given that post-pandemic slowdown. We just don't know how big it's going to be. Now let me paint an extreme bear scenario, which I don't think any analyst is considering, and hopefully that doesn't happen, but we can't just ignore it. This extreme bear case scenario, let me paint it for you. Let's say, for example, we were supposed to have a 5% compounded annual growth rate before the pandemic, and a lot of that just got pushed into the year of 2020. So if that growth rate was supposed to be 5% and 20% of it went into 2020, that means we're gonna have negative growth rates or flat growth for the next 5 years. Analysts aren't expecting that, and I think that's not factored in. Now, how do you factor that in? You know, you have to allocate some sort of percentage to that bear case scenario, whether it be a 35% chance, you know, or a 50% chance, but I don't know, and that's the uncertainty I face with these stocks right now. For that reason, I'm holding out, because if that scenario does play out, then I would like to own these stocks, and it's gonna be at a significant discount. So that's my take on these stocks. I really like them. I would want to own either of them. I think Lowe's is the better pick in a perfect scenario where this risk doesn't exist, because it has that upside for growth on top of the solid dividends, which is what I usually prefer given my risk profile. But of course, your risk profile might be a bit different than mine. Now, that's my take on these two stocks. I hope you enjoyed this video. I hope it provided you some value. Again, like, subscribe, and subscribe to my email list at any point. Well, the video's done now, so hopefully you do it now. And I'll see you on the next one.